If it goes past 2760, it warrants a look on the charts. That's about Hero MotoCorp. But the big drags in the financial space today have been the Bajaj twins, both Bajaj Finance as well as we're seeing some weakness on Bajaj Finserv by virtue of its holding in Bajaj Finance. But Bajaj Finance, of course, is the biggest nifty loser in today's trading session on account of its third quarter update. Abhishek joins in with what the brokerages are making of the company's update. Abhishek.
Well, Mangalam, as you mentioned, Bajaj Finance is the biggest loser in trade today. The volumes are also on the higher side, 5.5 times of 10-day average. Now, brokerages have written on Bajaj Finance. They say that the AM growth of 27% YOY is below their estimate. However, on the positive side, the customer addition is strong and number of loans disbursed, which is the highest ever that Bajaj Finance has recorded, is in line with estimates. They say that the growth has slowed down sequentially. That is Q3 over Q2. In a strong quarter despite the festive season. So if you take a comparison, a Q3 over Q2 of the last preceding 10 years in a row, this is the lowest growth rate that Bajaj Finance has seen, is what brokerages are saying. So either there was some festival impact at the end of Q2, or they might have lost market share, is what brokerages are saying. So brokerages do say that they see loan growth moderating going ahead. Macquarie has an underperformed rating with a target price of 5,275 per share, while CLSA has a sell rating with a target price of 6,000 per share. Back to you.
Thank you very much for that. Let's get in Deven Choksi to understand more about these individual big movers that we're seeing today. Deven, afternoon. Thoughts on Bajaj Finance and the kind of crack that we've seen, and what does it tell you about the outlook for Bajaj Finance?
Yep. Good afternoon, Rima. Well, I think on one side, the number of customers they have acquired in this particular quarter has remained, I think, quite convincingly high. At the same time, I think the loan book growth of around 27%, I think, also remains, I think, relatively, I think, stable, according to me. So the market has possibly seen these numbers upwards of 30% all along. So as a habit, I think anything below 30%, I think nobody would like it, that's for sure. But the fact remains that I think the company's business portfolio, I think, remains, I think, quite well distributed. Maybe in this particular quarter, one will have to get the management commentary a little bit more clearer, whether I think due to whatever the fluctuating quarter that we have had, the loans against security has been probably one of the reasons which could possibly have affected the performance in this particular quarter to a certain extent, which they may have pared down, I think, that particular position. Also quite possible that I think some amount of loans, I think, which they may have sanctioned to SMEs may probably get disbursed in the subsequent quarter. But I think this is my probably understanding on the subject. I would like to get the clarity as well at the same time. I don't judge the company per se on a one quarter basis. I think the company's fundamental remains quite strong. Their retail credit ability, I think credit lending ability rather, I think is remaining extremely positive. And on the top of it, I think the new platform that they have launched, I think for adding multiple products under a single site, I think that also gives good amount of confidence about the distribution reach expanding for the company. So maybe once some clarification comes out, I think we can get more clarity on whether this is a permanent fixture of lower growth, or I think this particular company probably, I think, deserves relatively better because of the, I think, the new ability to, I think, run through the distribution through the platform.
Deven, but at what time would you get a little constructive on the stock? Yeah, some clarity is awaited. We're seeing a sharp downtick, but this has been a big winner in the last few years. Maybe it's had a rough last few months. Do you think maybe another, say, 7-10% correction in the stock would provide an entry opportunity for a longer-term investor?
So I think generally we have seen this particular stock quoting at a price to book of around 6.5. And anything going below 5, I think, becomes a buy opportunity for this particular company. That is what one has experienced. In my viewpoint, I think this time too, probably one would like to see whether anything around 5 price to book on a forward basis, if it is available, I think that would be an entry point to get into the stock from the valuation perspective.
Got it. All right, Deven. Thanks for that. But let's move on to another stock. Sundaram Fasteners, that's passing in trade. It's up close to 4%. Also has hit a record high today. Sonia joins us to tell us more on that. Sonia?
Well, I'm tracking Sundaram Fasteners today. It's a TVS Group company and the stock is sitting at a fresh record high. In fact, if you look at it, the stock is now up almost 50% from the June 2022 lows, and the average traded volumes are also very high today. There's a 2 times jump in the traded volumes on NSE today against a 3-month average, so it's doubling of volumes that we've seen. Now, Sundaram Fasteners is one of the largest fastener manufacturers in India. It manufactures high-precision components across sectors for autos, for infrastructure, windmill and the aviation sector. And not just fasteners, it also provides metal components, cold extruded parts and forgings to auto OEMs. Now, it enjoys a very high market share of around 35 to 40%. In fact, it is the largest fastener manufacturer in India. And the earnings growth for Sundaram Fasteners has been very strong. In fact, in the first half of FY23, it's seen a revenue growth of almost 20%. And it has a good 400 crore capex plan over the next 2 years that it came out with on the back of higher demand. Now, there's a big electric vehicle play here as well. The company's Sri City unit has commenced the supply of products for hybrid and EV applications, and there are 150 crores worth of orders that the company has already bagged for EV products. It also expects to sign contracts worth over 200 crores for new electric vehicle products, and hence it is this EV play which is causing more interest in the stock. Stock is at a fresh record high today.
All right, Sonia, thanks a lot for that. So that is one stock which is at a fresh record high today. That's about Sundaram Fasteners. But one sector which is showing a fair amount of resilience today is the FMCG pack, and that's on account of a couple of factors. The first one is the fact that we are seeing a decline in crude prices. Secondly, the updates that have come in from both Marico as well as GCPL aren't particularly bad. In fact, if you just take a look at the Marico update, the India business for them has posted mid-single-digit volume growth. Revenue is in low single digits. That's because of the price cuts that they've affected on account of the decline in copra prices. Gross and operating margins for the company are likely to improve both year on year as well as quarter on quarter. That was a worry up until the first half of this year. So second half looks like margins may improve. They expect modest growth in operating profit as well. For Godrej Consumer, they've seen poor rural consumption and they've seen some slowdown post-festive season. But for them, the 3 problems that they had was, one, weakness in the India business, secondly, weakness in the Indonesian business, and thirdly, margin problems. All of that seems to be ameliorating, if not having gone back already to pre-COVID levels itself. They've seen double-digit sales growth in India business with low single-digit volume growth. They've seen gradual recovery and sales decline in low single digits in Indonesia, while Africa as well as the Middle East cluster continues to do well for them. What they've seen overall is high single-digit EBITDA growth on the back of gross margin expansion, but some of those gross margin savings going back into marketing as well. The important part, however, is that the next quarter, the outlook looks better than anticipated on rural recovery. Despite the weakness that we've seen in the first 9 months of this financial year, everyone's eyeing easing of commodity inflation as being one big trigger. Secondly, higher crop realization would aid the pockets of farmers, so that could aid consumption going forward. Ongoing government interventions to boost consumption, and we're talking about 20 days ahead of the budget, likely stimulus in union budget to go ahead and improve rural consumption could be one of the themes that everyone's betting on as well. And as a result of which, not only Godrej Consumer and Marico, all the other FMCG stocks are doing well in today's trading session. Devin, your thoughts on the FMCG pack today and the updates that have come in?
Well, I think we have been counting on this particular possibility for some time, that with the gradual fall into the food commodity prices, it is going to basically result into the higher amount of margin impact for some of the FMCG companies who are into the food segment. Also, those who are into other than the food segments in personal care, house care, I think where the raw material prices have come down. For them, I think the margin stability is more important. So third quarter should be reflecting this particular possibility of stable margin. And thereafter in the fourth quarter, along with the growth happening from particularly rural segment, one should be seeing the dual impact. On one side, the growth related revenue upside, and also I think the stable margin environment should result into better profits for these companies in general. I think some of the companies are trading at an adequately decent valuation. So maybe I think there may not be an immediate opportunity for buying into them. Correction in the price is always good opportunity to buy some of the expensive counters. So one will have to wait till such point of time if one really wants to buy at a bargain level.
Deven, do stay on. Need to slip into a very short break, but the pullback continues in the markets. It's 17,960 on the Nifty, which means a 70-point recovery from the day's low. On the mid-cap end of trade, things are getting stronger. Schneider Electric has risen 7.5%. JK Tyre, rubber prices cool. JK Tyre accelerates. That's up close to 5.5%. PFC REC too, seeing some interest in the last 10 minutes. Get into a break. We'll come back, continue our chat with Deven. We'll also invite Rupen Rajguru of Julius Baer on the other side.